It's too soon to know. Both sides have essentially agreed that talking is happening, and they couldn't even get that basic point straight between the two of them. We were engaged in this long game of chicken where Trump was insisting that she wanted a deal, and she didn't want to look weak, potentially facing a President Zelensky moment in the White House. So the fact that they have agreed to announce that talks are beginning itself is a stabilizing factor, but it tells us nothing about what the nature of any agreement actually will look like.
Professor Sacks, what is the significance of the two sides actually putting together a joint statement? There is a lot of optics in every trade negotiation, of course, but with China, the optics count even more. What do you make of this after just 2 days of discussions between the two sides?
Both sides want a deal. That's the bottom line. And I think it's coming from a place of political and economic weakness in both countries. What the joint statement says so far doesn't actually tell us anything. By and large, the statements are identical in Chinese and English, with the exception of some word choicing. I think whether or not they can get to a joint public agreement, once we get into the really hard issues, like what would a purchase agreement look like? What does fentanyl cooperation entail? The Chinese side desperately wants the U.S. to lift export controls. I don't see that happening. The U.S. side desperately wants the Chinese to undertake deep reforms in its economy. I don't see that happening. So once we get to the harder part of the negotiation, I think having this kind of joint communique is going to be increasingly difficult and could actually stall out altogether, depending on what happens.
Well, as you talk, Professor, about what the U.S. wants to see in terms of changes really to the structure of the Chinese economy, and this isn't unique to the Trump administration. The Biden administration under Treasury Secretary Janet Yellen talked about this plenty as well, concern over China's manufacturing overcapacity and the idea that it's flooding the market globally with cheap goods. What incentive does China have to actually change that practice? Can the U.S. really force that?
The incentive is going to have to come from internal sources. And something that often happens is you'll have interlocutors in China will use outside pressure from the U.S. to force changes to the domestic economy that politically wouldn't be possible without an external, U.S. forcing event, but it needs to come from the inside. So one thing we know about the lead of the Chinese delegation right now, the Vice Premier He, he's less of a reformer than the interlocutor for the first round of talks, Liu He. And so this is someone who's a staunch advocate of a state-led economy, not of more market liberalizations. And so I think that's going to be another factor that's going to make these kind of deep reforms more challenging. But we have to remember, Xi Jinping is under tremendous pressure right now in terms of Chinese jobs, Chinese businesses in the private sector. And so this is going to be something that's going to get them to the negotiating table, not necessarily because the U.S. is compelling them to. It has to come from within.
Professor Sacks, one thing that came up this morning during our conversation with Scott Bessent, the Treasury Secretary, was a new baseline, perhaps, for tariffs. And we'll have a listen to this, and I'd like to follow up with a question about it afterward. Let's bring him in.
Are you saying that tariff rates will only go up from here if this really is a floor of 10% on the Chinese side and 30% on the U.S. side?
I'm not saying that they're going to go up, but it would be implausible that they would go below 10.
Professor Sacks, how does this reset the U.S.-China trade relationship when it comes to tariffs, if we're talking now about a baseline that could perhaps go a little bit higher?
We don't really know yet. I think they're just trying to send a signal to consumers, to voters, to U.S. stock markets on the Trump administration side. Today, the stock market rally was a huge political win, and Trump wants to take credit for that. So I think that's what this baseline signaling is really about. But until we get into the nitty gritty, it's unclear. Now, could China just go back to the 10% baseline and be treated the same essentially as the other countries that are all in the process of potentially looking for deals or not? It's possible. But I think the idea is it's going to be impossible to fully recover to before liberation. Liberation Day. We're not going to go back to that. And it's a question of how far we're going to go. Is this just going to be strategic sectors, or is this going to be a sort of wholesale trade embargo? And I think we're looking now at a more narrow tailored decoupling. But what that means, again, what is the U.S. side actually going to offer up here is really what we have to watch.
Professor Sacks, what sort of signal is this sending to other U.S. trading partners that are also locked in their own negotiations with the Trump administration, even as we speak?
I think that, no one wants to have I think no one wants to be like China in this situation. So maybe it opens the door to more deal making. If China was the most intractable, I think we could potentially see a flood of other deals, maybe looking like the US, UK, or Mexico. But China certainly has always been the elephant in the room and will set the tenor for others to come.
Well, but when we consider trading partners in Asia specifically, which the administration has put a lot of emphasis and prioritization on, India, Japan, South Korea, how does that also influence ultimately how reliant the U.S. actually will be on China for trade and for goods going forward?
This gets at the question, what does the Trump administration actually want? Do they want to close the loopholes, for example, that have just squeezed trade and exports to places like India, Vietnam, Mexico? Because what happened is you have manufacturing diversification. No longer can export from China. Let's shift those supply chains to Vietnam, Indonesia, India. But then all of a sudden, those tariffs were just as high. So if the goal here is to reshore U.S. manufacturing and restore America's place in those supply chains, I think we're going to still see significant pressure on some of those other parts of the world. But at the same time, the U.S. is not going to want to alienate its key trading partners at a moment when it wants to sort of bandwagon. It wants Southeast Asian countries, for example, to come on board and be an economic counterweight to China.